Hey guys, Courtney here, and we are going to dive into the home-based business deductions that you're entitled to take. So there is something called a safe harbor, which is a simplified method that we will talk about, and then there's a traditional method that you can take advantage of. And the safe harbor, although it is simplified, it's nowhere near as beneficial as the traditional version. So how that works, safe harbor, is that let's say you have 210 square feet of an office space in your home, or that you're using for business purposes. And so it would determine that at $5 per square foot. And so now you'd have $1,050 in a deduction. And the maximum that you're allowed is $1,500. So when I typically see a business use of home being written off, it's between $3,000 and $5,000 minimum in deductions that you're entitled to take. So the traditional home office deduction is you take the square footage divided by the square footage of your office, or what you're using for business purposes, divided by your square footage total for your home, and you can actually increase that by backing out the closets and your hallways. So that can actually be based upon the square footage of the total house minus the closets minus the hallways, which could be, completely substantial, and increase your percentage of your deduction. So in this scenario, it's 13.1%. And we would look at all of these deductions that you can take advantage of. You've got things like mortgage interest, your real estate taxes, you've got utilities, homeowners insurance, alarm services that you would have, home office repairs, so repairs and maintenance. So, some of these, as you can see, are 100% deductible if they have to do specifically with the area that you are using for business purposes, whereas the others would take the 13.1% deduction off of that. On top of being able to write off these things, you also can depreciate your home and your furniture as well. So based upon the percentage use, then you would depreciate your home over the matter of 27 and a half years. So, a lot of people don't realize, when you buy a home, even if you're doing rental property, or if you have a home that you are using for business purposes, you have to write that home off over 27 and a half years. So that's typically a long time. But if you had, a $100,000 home, 13% of it was used for business purposes, you would take that amount of money, they would divide that by 27 and a half years, and you would be able to write that off every single year when you would get that tax advantage. You can see that business use of your home, especially if you're spending a lot on repairs and maintenance, that could include yard work, that could include a new swimming pool, that could include anything that you spend on your property to, as repairs, as maintenance, as insurance, taxes. All of these can add up to be massive tax savings along the way. And so I typically see between $3,000 and $5,000 a year in tax deductions. And I want you to understand that you need to take advantage of this business use of your home. One of the other really huge benefits of that is if you don't take advantage of that and you have a home-based business, and let's say you have a traditional business as well, then you can't take advantage of commuting miles. So one of the biggest reasons why I tell people that you should have, even if you have a traditional business, you should also have a home-based business, is because of commuting miles. Commuting miles are miles that you would drive to and from your office. So if I drive to my accounting firm and I drive home, that is not a tax deduction, unless I happen to stop by Office Depot, or happen to stop by and see a client and pick up something along the way, or on my way home, then I could write that off as a tax deduction. But if you have a home office and you have a business use of your home, so if you have a home-based business, now you have a home office that you can take advantage of, and then every time you leave your home, you can actually write that off as a business tax deduction. So that's a huge deal, and you need to take advantage of that. Make sure you're taking the deduction, typically the safe harbor, again, is going to always it's not going to be in your best interest, but it is the simplified method. So if you're not going to do the traditional make sure you at least take care of the safe harbor method. But if not, make sure you're keeping track of all of these expenses, because they can truly add up to save you thousands and thousands of dollars every single year in tax savings.